FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. It's June 14th, 2018. Gotten a number of requests from you out there asking to talk about mining stocks. Obviously, you're itching. Things appear to be happening in the sector, so we're going to get to that. But first, as always, I urge you to join the discussion, make my day, send me an email. I'm only about 30 or 40 behind right now. I'm catching up. I found a couple of real oldie but goodies. I've responded to them. We'll be reading some of these emails, if not in this show, in others. Gotten some really good questions lately, and you guys really are curious about what's going on, which is good thing to be. Just before we get started, so when we look at current metals prices, they popped a bit today. The gold price is around $13.04 the ounce, up about $4.50, $5. Silver, big performer today. It's up 15 cents. Probably gone down a little bit because we're looking at options, futures trading closing on the COMEX at 135, so they always try to drive it down. But silver, $17.16 the ounce. It's back up over $17. We told you it was going to happen. But the interesting thing is the dollar today is up 1 point, which is a huge move in the currency markets. They just don't move like that generally. It's at 94.49 on the Dixie index. So good friend of ours, good friend of the show's back, David Erfle. David, your publication, juniorminerjunkie.com. And these stocks are getting interesting. But first, welcome back to the show.
Thanks, Kerry. Thanks for having me back. Always great talking to you.
So miners, are we getting to the critical inflection point yet? Or is that going to take place a few months from now?
It seems we've been at that inflection point for a while as the GDX has traded in this range between 21 and 23 for the longest time. In fact, the Bollinger bandwidth on the weekly GDX is the tightest it's been in its history. And I was hoping for this Fed rate hike to be a catalyst for it to either break up or break down. But right after the hike was announced, it broke down and hammered, and then this morning it's trying to break out, and it's reversed a bit. So I think the sector's still searching for that catalyst that'll finally break it out of this range. While many of the investors in this sector are being lulled to sleep, the sentiment is really low. Sentiment levels are at areas where we've had reversals before, and I've seen a lot of people giving up in the sector, chat rooms that I'm reading about people being disgusted and wanting to move on. And this is the stuff bottoms are made of when you have the sentiment this bad.
Yeah, complacency is setting in. And we've got a email here from, it's Keith Takachi. And, he wants to know about mining shares. He's kind of interested in the sector and wants to know what he should be looking at and what you should be thinking about when you're buying into this sector, because it's so volatile, it's so unpredictable. It's as bad as buying natural gas options,
Yeah, I hear you, but he's looking at a sector that is presenting incredible opportunity here. It's been my view that this is the last deep value play left in the marketplace. I mean, everything has gone up except for miners, while they continue to wallow here. But what you want to look for, especially right about now, is what I'm seeing is capitulation selling in a lot of quality juniors that were high flyers earlier, and you're seeing selling drying up in juniors also. So what you want to do is you want to do as much due diligence as you possibly can on these things. And if the valuation looks good and the chart's got a fishing line on it, you just kind of hold your breath and buy it, because this is the best time to buy things right now. And the only way to make money in this sector, well, not the only way, but the best way to make money in this sector is to buy fishing lines of quality juniors and sell rhino horns.
I love that. That's pretty funny. So we're really looking at a sector that's poised for major growth, for major advances, but it's been poised for a few years now. I mean, look, it was in the doldrums for a good 5 years. For the past 2 years, it's just kind of been like you said, it's kind of watching paint dry. And if you've ever done that, or watching a pot of water boil, right? It just never boils fast enough. And you turn up the heat, you jiggle it around, and all you do is you keep waiting. And then all of a sudden, 2 seconds later, it's boiling over the pan, all over your stove, right?
Exactly. Yeah, we had that huge 180% move in the GDX from January to July of 2016, and that was mostly short covering from the vicious bear market we had for nearly 5 years before that. And this action now has been consolidating that move for nearly 2 years. Mm-hmm. And it's basically been a stock picker's market for the past few years. There has been many success stories, but there's also been a lot of heartache and a lot of pain in many of these juniors. So you really got to do your due diligence and pick the right stocks. But it can be done. But if you just bought the sector ETFs, GDX and GDXJ for the past 2 years, you really haven't made any money.
Yeah. So but you had to. There's also a seasonal aspect of these metal stocks, mm-hmm. right? And commodities. And we're heading towards the point of maximum seasonality, where there's a seasonal advance. Now, the interesting thing is we've seen it 3-4 years in a row. It happened like end of the third quarter to the middle of the fourth quarter, and all of a sudden it takes off 15-20% gains. So you can play this sector seasonally, but the seasonal bump might not ever come. My personal belief is this year it's going to come. It's probably going to be a little bit earlier, like probably August, maybe early September. But this is a great seasonal play as well.
Absolutely, yeah. Historically, July and December are really good times to buy juniors, because you usually have a tradable bottom in both of those months, and December is usually a good time because of tax loss selling. And since there's been so much pain in the sector this year, the tax loss selling may even start even earlier than it usually does this year. But you just, like I said, you just got to do your due diligence and pick the right companies and pick your spots.
Yeah. So picking the right companies. What companies you think hold the most potential right now, David?
Oh, geez. Well, I've got a top 10 list that I follow and that I've presented to my subscribers. And in that top 10 list, I've had a few big winners, and some of them are still trading at or near multi-year highs. One of them is Atlantic Gold, and another one is Minorum Gold. And then another one has been Novo Resources, and I'm sure many of your listeners are familiar with this one. This one has been up and down a lot recently, and I call it the Woody Allen deposit, because it's got lovers and it's got haters, and nobody's really, oh yeah, I like that stock. It's either they really love it or they really hate it, and there's highly respected geologists in both camps. So it's a very interesting and unusual deposit, and the company's been making strides. And every time they have a setback, the stock has a gap down, and a lot of selling comes in, because the valuation, the market cap is priced at perfection here as far as the potential of the stock. So you just got to be careful with stocks like this, and you never buy a junior that's going up. That is not the time to buy a junior. The time to buy a junior is when everybody hates it, or it's giving you a really good valuation at share price.
Yeah. Yeah. So obviously when everybody's buying, it's already too late for you to even think about getting involved in it, right? I mean, it still could go higher. Let's face it. if you get in at the beginning of the move, you're always a lot better off. And these moves happen so fast, David, that if you're trying to time it, it's really difficult to time it to precision. I mean, I've never been any good at market timing, and most people I know really cannot do it.
Yeah, it's very difficult. But what you can do when you see these success stories is you just put them on a watch list and track them, because eventually it's going to have some bad news and it's going to get hit hard. So if you do your due diligence on the stock and you have a price in mind that you want to pay, many times that price is going to happen, and it's going to present an opportunity for you. So you just have to be patient with these things, not only when you hold them, but before you buy them. I mean, there's been times where I've watched a company for years before I bought one. I just purchased one this week that I've been watching for a few years, and it presented a great buying opportunity. So you just have to be very patient and know that if you've missed a train that's left the station, there's always a train somewhere else in this sector that hasn't left the station. You just got to find them. And in order to find them, you attend conferences, you talk to management, you talk to other people in the sector, you read as much as you possibly can, and just like I said, do as much due diligence as you possibly can. And you will be successful if you do all these things. But it does take a lot of time. So if you don't have that time, you can subscribe to a service like mine or many other very highly respected newsletters out there.
Yeah. So, and when we look at the market, this is really a value sector, at least for a lot of the more established producers. It's really one of the few sectors you can look at and say, gee, the tangible assets way exceed the market cap. Maybe there is some value here, right? You just don't see that in many sectors.
Exactly, but there's so many factors you have to look at. I mean, I have a checklist that I go down, and if the company doesn't tick one of those boxes, I will not buy it. And this is a great way to eliminate most of the stocks in this sector, because there's thousands of them. But 90 to 95% of them, as far as I'm concerned, aren't worth anything.
Yeah,
so you just have to do a lot of work searching for that 5 to 10 to 15% that are worth getting into.
Yeah, for sure. So obviously, we all know the first thing you look at is management. Do they have a record of success? Are they connected? Do they have the ability to raise capital? And then you look at the quality of the project, or as our friends to the north would call it, project, right? You're looking at the viability, infrastructure, good stuff like that. Is there any other particular thing that you look at that really you just see it instantly and it's a stock that you need to take a closer look at?
Well, a big thing for me is share structure. And ownership of the project as well. Share structure is key, because if you got a company that's, let's say it's an early stage junior, and they've already got 150, 200 million shares out, there's not a lot of upside in that stock, because they've already blown out their share structure before they've even defined a deposit. So look for companies that management has a track record of keeping tight share structures. That's a big one. And also what you could do is check Canadian Insider every morning when I get up. That's the first thing I do. Because when you're doing your due diligence on a company, you're getting ready to buy something, or you really like something, watch insider buying. And if you see management coming in and doing a lot of buying, that's a good sign that there's a bottom coming into the stock, or there's some good news coming into the stock, or the valuation is really good, because it's always nice to see management putting their own money in their own companies.
And that's an interesting thing. So many of the companies that we deal with in this sector are Canadian companies, and Canadian companies, for some reason, David, don't pay attention to share structure. They're issuing over 100 million shares for the most micro cap stock, and then you've got to see massive movements in earnings, or some incredible acquisition that takes place at a greatly, I don't want to say inflated price, but a great premium to the underlying asset. And it seems like everything is really against that type of stock from succeeding.
Exactly. Yeah, I couldn't agree more. You just you have to take as much risk as you possibly can out of a highly risky speculation, which these things are. This is a very high risk sector, and the best thing to do is take as much risk as you possibly can out of your risky speculation. And what's happening right now in this sector is, like I said, there's a lot of people giving up in a lot of these stories, and a lot of babies being thrown out with the bathwater here, and it's a good time to find the ones that are worth getting into with a really ugly chart. Yeah.
So ugly chart, low number of shares outstanding, insider action, as they say. I mean, it's a cliche on Wall Street. Let's face it. There's many reasons why an insider will sell, but there's only one reason why an insider buys.
Absolutely.
Yeah. So it sounds like a good formula. And I'm sure how many stocks do you cover in the Junior Miner Junkie, that's with a Y, newsletter?
I own close to 30 right now, and I keep it below. I like to keep it below that number. And I purchase shares in all the companies that I follow, and I don't take any money or monetary compensation whatsoever, stocks, options, warrants, or anything from companies that I cover. I kind of like to do what I like management to do in their own companies. I put my own skin in the game, and I also give my subscribers a 24-hour heads up before I buy something, so we can all try to get in at the same time.
That's great. Hey, any particular opinions about options and warrants?
Well, as far as warrants are concerned, when you're looking to buy something, you're looking to get into a private placement, it's a necessity to have a warrant before you do a private placement. But if you're an owner of the stock, you don't like to see warrants. That's especially in something that you're looking to purchase. If you see something that's got a company that's got a lot of warrants out that are in the money, that's going to keep a lot of pressure on the stock, and it's not a good idea to invest in something that's got a lot of warrants in it that are in the money.
Mm-hmm. But if they're out of the money and they got a ways to go, then it's probably a neutral factor in the stock.
Exactly. Right. But you also want to pay close attention of why they're out of the money. What's happened to the stock? Why did it go down so much? Was it management's fault? Was it the property? Is there a fatal flaw in the property that the market saw? There could be many reasons, and some of the reasons could be short term. Some of them could be long term. So it's dangerous business when you're trying to catch a falling knife, but it can be done successfully if you do as much due diligence as you possibly can. You find out the reasons why that stock has been selling off.
Yeah, and which most of the sector has been doing for years now. So there's a very good chance if it's sold off, doesn't so much have to do with the company as the sector being out of favor. Anyway, the place to go, Junior Miner, MINER, Junkie, JUNKY.com. Take a look at David's offering. Questions for David, myself, you know where to send them. KL@KerryLutz.com, Twitter feed @KerryLutz, and the Facebook page Financial Survival Network. If you're listening on YouTube, hey, comment, send us emails, subscribe, click that subscribe button. Everybody says it, and the little red ringer there, the bell, so you automatically get notified when we post new episodes. David, it's always great speaking with you. Looking forward to seeing where this advance takes us. It's looking pretty good, and we'll talk to you again real soon.
Great. Thanks a lot for having me, Kerry.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.